If you traded last week without a plan, you probably felt it. Markets move fast, and if you weren't watching the right levels, you got stopped out or missed the move entirely. Hi, I'm Marjan, and in my trading, I use volume analysis to track institutional order flow. That means I don't just look at candles, I look at where the big money is positioned, and I trade with them, not against them. This week, there are 4 setups I'm watching very closely, and by the end of this video, you'll know exactly what I'm looking at, where the key levels are, and what I'll do if price gets there. Stay till the end. I'll reveal the one trade I think had the cleanest setup this week. Let's get into it. Before we touch a single chart, let's talk about what's on the calendar this week, because fundamentals can invalidate any technical setup in seconds. On Wednesday, we get US GDP final revision. Markets are watching closely to see if the US economy is softer than expected. Thursday brings initial jobless claims, another read on the health of the US labor market. And don't forget, the Fed is holding rates steady at 3.50 to 3.75%. The probability of a June cut sits near 0. 97.4% of the market expects no change. That's a USD supportive environment, at least short time. What does this mean for our pairs? It means the dollar has a floor. Any weakness in DXY is likely to be temporary unless GDP surprises badly to the downside. Keep that in mind as we go through each chart. Alright, let's start with everyone's favorite, gold. Now, on the 1 hour chart, I'm seeing something really interesting. A head and shoulders pattern that completed right as the market opened, with the neckline already broken. Now, before you jump in thinking short gold, here's where my strategy takes a different approach. When markets open with a gap, price has a tendency to fill that gap first before committing to a direction. And that's exactly what I'm waiting for. I'm not chasing price here, I'm just letting the market come to me. So, on this chart, as you can see, I am looking for a buy position, which is in this green area. And it is something between 4,516 and 4,630. That's green zone on the chart, as you can see. If price pulls back into that area to fill the gap, that is where I'll be looking for my long entry trigger. My target, once I'm in, I have 2 targets. My first target is 4,621. That is the first take profit, partial close here, and the second one would be 4,642, and that would be the full exit. Now, could gold push straight up from here without filling the gap? Absolutely. Markets don't owe us anything, but my strategy is built on high probability entries at the right zones, not FOMO entries chasing a move that's already happened. If this one runs without me, there will be another setup. So that's the discipline that keeps your account alive. Here's the quick breakdown for gold. Pause the video and lock these levels into your charts. Now let's move to euro dollar, and this one is fascinating right now. On the 1 hour time frame, I can see a completed ending structure. Price has finished its move and the market opened with a gap. Now here's my thinking. Gaps normally have a strong tendency to get filled before price commits to next direction, and on top of that, we're sitting right at the bottom of the channel. Two confluences pointing to the same thing. That's the kind of setup I look for. So my plan is simple. If price comes back down to fill that gap and lands in my green zone between 1.1615, I read it like that, and 1.1628, that's where I'll be watching for a long entry. And my target is 1.1698. And I want to be clear about why I'm not just setting and forgetting this trade. At this level, there is a confluence zone, a decision point where I need to watch how the market reacts. So, does it push through or does it reject hard? I don't know yet. And anyone who tells you they know is probably lying. So, I'll take partial profits there and read the price action before deciding the next move. What I will not do now is buy blindly, and I just need the gap fill. I need price in my zone, no trade. Here's the quick summary on Euro USD. Now regarding the next one, which is AUD USD, and if you've been following this channel, you already know why. I've been talking about selling Aussie for a while now. Let me tell you what I'm seeing right now. This current move to the upside, if you take a look closely, I'm not buying it, literally. When I look at the buying pressure behind this rally, I think it's weak. There's no conviction from buyers that move up looks corrective, not impulsive. And in my experience, weak rallies into supply don't end well for bulls. So I'm still in sell mode, and here's exactly where. My red zone, my sell area, is between 0.7215 and 0.7231. Why there? I have two reasons for that. First, there is a confluence node at that level, a price area where the market has shown it cares before. And second, there is a relatively high volume in that zone, meaning there are orders sitting there. When price walks into a high volume supply area with weak buying momentum, that's a high probability short setup. My invalidation is a clean break and close above 0.7231. If buyers push through that with strength, I step aside, no ego and no revenge trades. Now, for targets, I fully expect price to take out to the previous low on the way down. And my long-term green target, as I've mentioned before, is here. somewhere between 0.6962 and 0.7031. This is not a scalp, this is a bigger picture move I've been building conviction on for weeks. And you know, patient traders get paid. That's the plan here. Here's the quick summary on AUD/USD. Now I want to reveal the number one setup for this week that I promised you at the start. I want to show you a pair where I'm already in an active trade and the move has already started. Euro CHF. I don't always show my live positions in these weekly market updates, but this specific chart is a masterclass in volume behavior and I wanted to share it with you. So, if you look at the chart, I caught this move right in the buy zone, and which is somewhere between 0.1990 and 0.9103. But here's the interesting part. Why did I choose this specific zone? This time I picked this area because it represents a low volume node. Now, why trade a low volume node instead of high volume? Because in institutional order flow, low volume nodes often act as major vacuum areas. When price revisits them, it either slices right through or, like we saw here, experiences a very fast, sharp rejection because there's an absence of opposing liquidity. As you can see, price tapped perfectly into that low volume pocket, grabbed the necessary liquidity and pushed up. My buy order was triggered and we are safely in profit. What is the plan from here? My ultimate target is somewhere here. As you can see, it's 0.9183. It's a clean liquidity pool where I expected the market to efficiently deliver the price. If you manage to catch this entry with me down there, now is the time to manage your risk. Secure some partial or move your stop to break even. If you missed it, do not chase it here. I think you'll find something else. We wait for the setup or we don't even trade. Here's the quick summary on Euro CHF. And that's a wrap for this week's analysis. If this was useful, smash that like button. It genuinely helps the channel reach more traders who need this kind of content. Subscribe and hit the bell if you want this every single week. Fresh levels, fresh setups every Monday. Drop a comment below. Which pair are you trading this week? I read every single one. I'll see you next Monday, and trade smart, protect your capital, and remember, the best traders aren't the ones who trade the most. They're the ones who wait for the right setup. Take care. See you next week.